Hi everyone, welcome back to the Clara CFO Group channel. Today we're going to talk about the max compensation for business owners. There was an interim rule put out on June 22nd, and that interim rule had a lot of guidelines, but specifically around what owners could pay themselves. And I know this is a big deal for all of you. So we go through Schedule C, Schedule F, partnerships, S Corps and C Corps. They give specific guidance for each one of these. So I wanted to bring this information to you, and because this is what you guys are asking for. So please be sure to subscribe to this channel, because the questions that you guys are asking are getting looked at, and we are trying to put out content specifically for these questions. So be sure to subscribe, like this video if this is helpful to you, and we're just gonna dive right in from here, okay? So we're actually gonna hop over to the screen sharing, because I've built a spreadsheet for you guys that is available for download. You can find the link in the description below. So if you just wanna make your life easy, you can plug in your own numbers and figure out exactly what your max compensation should be, okay? So we're gonna go right over right now. All right, you guys, here we are in the spreadsheet, and I have actually just added an extra tab to the budgeting spreadsheet that I have been working on over the past couple months that many of you already have. And just to give a brief update on that, we did update the tabs to show where you have Schedule C filers, you have an 8-week and a 24-week tab, and then also for corporations, you have an 8-week and a 24-week tab, depending on the covered period that you have selected. So make sure that you have this spreadsheet. If you don't have it already, the link is in the description. All right. So we kind of keep adding to it and building on it as things change. So the way that I have this set up is that we are going to go through by entity type, because the compensation and the max compensation is different for each entity type. All right. And a lot of that is because of the way that owners are paid in the different entities. And when I say entity type, I'm really talking about how you are taxed. Are you taxed as an S Corp? Are you taxed as a sole proprietor? Are you taxed as a general partnership? All of these things matter. So you do need to make sure that you are aware of your tax forms, and you need to know of your entity status, okay? And then I have just basically columns for people who are electing into the 8 weeks, the original 8-week covered period, and then the 24-week period. All right. So just depending on, go and find your entity type and pay attention to that section. And anything in teal is something that you can update. And well, really, you could change any of these numbers, but the teal is the number that you need to put in for your actual number. Okay, so if your Schedule C line 31 says $58,252, then you need to put that number in here. Okay, I've just put 100,000 across the board because we are talking about max compensation. If you had any of these numbers in teal, so self-employment tax or Schedule C line 31, for example, if your Schedule C line 31 was over 100,000, you have to limit it to 100,000. All right, that goes across the board. It doesn't matter if you're electing the 8-week period or the 24-week period. The way that this is working is, when the interim rule on June 22nd came out, they said, okay, now that you have the ability to elect the 24-week period, it still doesn't mean that owners get to pay themselves a weekly rate for 24 weeks, okay? Because remember that we applied for this loan based on 2.5 months of payroll. We didn't get to elect into almost 6 months of payroll. I wish we had, that would have been amazing, but we only applied on 2.5 months of payroll. So the SBA and the Treasury have decided that they're going to max out the owner's compensation. Even if you're electing into 24 weeks, you're going to max out at 2.5 times your compensation. Okay. And then they have also given more guidance to say that it doesn't really matter what you're paying yourself right now. What they really care about is what you paid yourself last year. Make sure you're really clear on what you paid yourself last year. And we're going to go through the different line items. Okay. So let's just say you elected into the 8-week covered period and you are a Schedule C. So this is for sole proprietors, independent contractors, Schedule C filers, and then also they say Schedule F filers are essentially the same, are calculated the same way. The only difference between Schedule F and Schedule C is well, Schedule F is for farmers and Schedule C is just for independent business owners, but the line is different. So if you look at my little note here, if you are a Schedule F, you'll use line 34, which is your net profit in your business. Okay. So if you got $100,000 or more, you would put 100,000 in here. And then this calculates your weekly pay rate, and you can take 8 weeks of compensation in the 8-week bucket. Now, if you go over to the 24-week period, we are going to calculate your monthly rate, and then we're going to calculate 2.5 months, and that's your max. All right, so if you change this number to 50,000, it's going to change your calculation. All right, so you need to put in what your number is for Schedule C, line 31, if you are a sole proprietor. So we're just talking about the maxes here. Okay. And general partnerships. So general partnerships are a little bit different. What you're going to look at is your net earnings from self-employment. And sorry about my notes that keep popping up. The notes for the partnership were kind of extensive, so I just put them in the comment. So you would look at your net earnings. It would again be capped per partner at 100,000. So if you have 3 partners, you can each have a cap of 100,000. And then it does get reduced for self-employment tax. And then you calculate the weekly rate, or I've calculated the weekly rate for you in this spreadsheet. And then you would take 8 weeks of pay if you elect into the 8-week covered period. And then very similar thing, we're going to calculate the monthly and then 2.5 months. All right, so that's pretty straightforward. Really, your role right here is just to get the right number into these teal boxes, and you to pick your correct entity level, and then put your correct numbers into the teal. All right, now we're going to go down to the C corporation. So if you are a C corp, the calculation is done a little differently. So you are allowed to take $100,000 of owners of cash compensation, but then you are able to also include your retirement contributions that were paid by your employer, as well your employer, which is your company, being a C corp, and then your healthcare contributions that are paid by the employer. You can actually add those, so your total compensation can technically go over 100,000 because you're adding in those separate payroll costs. Okay, so these in this situation, your weekly pay rate would still be calculated the same way, and then you would take 8 weeks of comp. So you'll see that is higher, 17,692, higher than the 15,385 that we've been talking about a lot, because you've added in retirement contributions and healthcare contributions. It was interesting that they are limiting even these to 2019 contributions. What they're really trying to do is they're trying to avoid the owner receiving a windfall of additional funds, because lots of people were talking about, well, what if I just max out my retirement? What if I just pay myself more? What if I give myself a bonus to use this PPP money? And I think all of that really got the SBA thinking, well, how do we prevent that from happening? They're actually okay with employees getting paid more, because they're allowing things like bonuses and hazard pay, and allowing for compensation and payroll to actually be paid for a full 24 weeks, but not for owners. Okay, not for owners. All right, now on the 24-week side, very similar. We're going to include all the same costs. It's just, again, the calculation, take your monthly, multiply times 2.5. All right, and the S Corp is almost exactly the same as the C Corp. However, they are not allowing employer paid healthcare contributions. We were allowed to take that under the C Corp, but not under the S Corp. And it's just the way that the S Corp health contributions are being taxed, okay? Or how they're being added as compensation. So you will just go in and add your numbers based on what your business is actually doing. So this spreadsheet is meant to just show max, and you can go in here and edit for your entity. Make sure you find your entity, and then you also determine, am I taking the 8-week covered period, or am I taking the 24-week covered period? Simple as that. All right, guys, use the calculator. It'll make your life a little bit easier, and you won't have to worry about it. All right, well, I hope that was helpful for you. If you do want the spreadsheet, you can find the link to the spreadsheet in the description below. And be sure to like this video if that was helpful, and also make sure you're subscribed.